Okay, so we've talked about how to get RBF, but what happens after you've got that funding? How do you make sure it doesn't become a burden?
That's where the real work begins. Managing it effectively is how you turn RBF into a growth driver.
Okay, so let's break that down. What are the top priorities?
The top one is budgeting for those repayments.
Right.
And remember, they're not fixed like a traditional loan. They fluctuate with your revenue.
So you need a plan to handle those payments even during the slow months.
Exactly. Anticipate those ebbs and flows, build in some buffers.
Okay, so it's like creating a financial cushion.
Exactly. Don't assume that because you're making good money today, you always will.
Be realistic.
Yeah, factor in those other expenses, create a roadmap that includes those RBF repayments.
Without straining your operations.
Right, and don't forget about those reporting requirements.
Oh, right.
Most RBF providers want regular financial reports, usually monthly or quarterly.
So they can make sure those repayments are calculated correct.
Exactly, it's about staying accountable.
But these reports aren't just for the RBF provider, are they?
You got it. They're a valuable tool for you, too,
Okay.
to monitor your performance, track your progress, identify areas for improvement.
It's like a financial checkup.
Exactly, helps you stay on track.
Okay, so we're budgeting, tracking, reporting, anything else.
Communication. Keep those lines open with your RBF provider.
Okay.
Keep them informed about any big changes in your business, good or bad.
So it's like any relationship. Communication is key.
Exactly. They're there to support you, not just collect payments.
Right. And by keeping them in the loop, you're more likely to find solutions that work for everyone.
Exactly. Your success is their success.
Okay. We've talked about managing the agreement, but what about the bigger picture? What does the future hold for RBF?
Oh, it's super exciting. It's evolving rapidly, driven by technology.
Okay, like what?
We're seeing AI and machine learning being used for faster approvals, more personalized terms.
Skin smarter.
Exactly. We're also seeing these hybrid financing models.
Oh.
They combine elements of RBF with other structures, so businesses have even more flexibility.
It's like the financial world is getting a remix.
You got it. And we might even see more impact-based financing,
Okay, what's that?
where RBF repayment terms are tied to social or environmental impact metrics.
So it's not just about financial returns anymore.
Exactly. It's about aligning funding with values.
That's amazing.
And with the gig economy growing, we'll likely see more specialized products for freelancers and micro businesses.
Right, because traditional financing doesn't always work for them.
Exactly. RBF has the potential to really change the game for them.
Okay, AI, hybrid models, impact investing, specialized products. It sounds like RBF is becoming more inclusive and accessible.
It is. And that's just the beginning. There's so much potential.
It's an exciting time to be in the small business financing space.
It is, but with all this innovation, it's more important than ever for business owners to do their research.
Right, understand their options.
Exactly. RBF is a powerful tool, but it's not the only tool.
So what are some of those other options? What else is out there?
Well, there are the traditional routes like bank loans. They offer fixed interest rates, fixed repayment terms.
Okay.
They often require collateral, strong credit history, but they can provide larger sums of capital,
At lower rates.
especially for those well-established businesses.
So if you're looking for predictable financing,
Yeah, a traditional bank loan might be a good fit.
what about SBA loans?
Those are government-backed loans specifically designed for small businesses.
Okay.
They often have better terms than conventional loans.
Like lower down payments.
Exactly. And longer repayment periods.
But probably more paperwork.
Yeah, the application process can be a bit longer.
Okay. What else?
There's a business line of credit.
Okay.
It gives you flexible access to funds up to a certain limit.
So you only pay interest on what you use.
Exactly. Good for managing cash flow, covering unexpected expenses.
Like a financial safety net?
You got it.
Mm.
And if you need to buy equipment, there's equipment financing. Those loans are specifically for that, with the equipment itself as collateral.
Makes sense.
Then there's invoice factoring.
Okay.
You sell your unpaid invoices to a factoring company at a discount to get cash faster.
So you get your money quicker,
Exactly.
but you don't get the full amount.
Right. There's a trade-off.
And then there's equity financing, right?
Yes, from angel investors or venture capitalists.
So you get capital and expertise.
But you give up some control.
Okay, what about peer-to-peer lending?
Those platforms connect businesses with individual lenders online, often with competitive rates.
Interesting.
And then there are business credit cards.
Right, for those short-term needs.
Exactly, but usually with higher interest rates.
Okay, and crowdfunding too.
Oh yeah, you raise funds from a large pool of people.
Wow, that's a lot of options.
There's something for everyone, really.
So it's not one size fits all.
Not at all. It's about finding the right fit.
You mentioned something earlier about refinancing. Can you actually do that with RBF?
Absolutely. As your business grows, your financial situation might change.
Right.
And that initial RBF agreement might not be the best option anymore.
So you can refinance.
Exactly, to secure better terms, reduce costs, or even get more capital.
It's like giving your RBF agreement a makeover.
You got it.
When's the right time to think about that?
Well, ideally, when your business has shown good growth, you've built a better credit profile. Or maybe market conditions have changed.
So strike while the iron is hot.
Exactly. And the process is similar to applying for the initial RBF.
Gather your financials, show your progress, negotiate.
You got it.
So even though you're already in an agreement, you're not stuck.
Nope, you've always got options.
But RBF isn't the only option.
Right. Explore all the possibilities, choose what makes the most sense for you.
What about taxes? We haven't talked about the tax implications.
Oh, right. Taxes. Can't forget those.
So what are the key things we need to know?
The initial funding isn't taxable income, but the repayments might have different tax implications than traditional loans. The interest portion is usually deductible, but those payments fluctuate.
So it's not as simple as just deducting the whole amount.
Right, there's some calculation involved.
And what about the impact on my effective tax rate?
As those repayments increase, they can lower your taxable income during high growth periods.
Okay.
So it could lower your overall tax liability in the short term, but it might affect certain tax credits or deductions.
It's complicated.
It can be, and the tax treatment can vary depending on how the agreement is structured.
And if you're operating in multiple places.
Oh, yeah, it can get even more complex.
So the key takeaway is to get expert advice.
Absolutely. Understand the nuances of your agreement, plan accordingly.
Tax planning is essential.
It is.
I think we've covered a lot.
We have, but I want to leave you with one final thought.
Okay, what is it?
Don't be afraid to think outside the box when it comes to financing.
Okay.
The traditional methods aren't always the best. Explore all your options, do your research, get expert advice.
Choose the path that empowers you. Well said. Be proactive. Be informed. Make strategic decisions.
And remember, this world is constantly changing, so stay curious, stay informed.
Because at the end of the day, it's not just about getting the money.
Right.
It's about using it wisely to build a successful and sustainable business.
And making a positive impact.
Absolutely. So to all the entrepreneurs out there, keep chasing those dreams. Keep innovating.
Keep growing.
And never be afraid to think differently about financing.
Exactly.
That's a wrap on our deep dive into revenue-based financing. We hope you found it valuable.
We'll see you next time for another deep dive.
See you then.